What's up everyone? Welcome back to another video from Top Growth Financial. Today I'm going to be breaking down PayPal, ticker PYPL. I'm going to give you guys a breakdown, analysis, price target, and more in this video. Is it a buy right now? Stay tuned to find out. Alright, so first let's talk a little bit about what PayPal does. And they engage in the development of technology for digital payments. They operate their online payment system in the majority of countries that do support online money transfers. And they own a couple online payment application platforms. First one being PayPal, another one being Venmo, one you've probably heard of as well. And what that is you can transfer money from one person to another via these apps online. These online forms of payment are becoming very popular, and I think it's going to be a very big part of the future. So with that being said, let's take a look at PayPal's charts. Alright, so we have PayPal's 1 year chart up here. As you can see, they're just below $300 a share right now, up $116 in the past year, which is about 63.5%. But you can see they have a peak here back in February. It was at 309. So they're only about $9 off their 52-week high from back in February. So their stock price is a little high right now, and they're currently sitting at a PE ratio of about 66.5. If you've watched our previous videos, usually we don't like to go above a PE ratio of about 30. So that is a little bit high right now. But let's go over to TipRanks and see what some of the analysts have to say about this company. Alright, so out of 24 ratings, we actually have 21 buy ratings and 3 holds, which will give us a consensus of a strong buy. And we have an average price target of just below $324, which gives us an 8% upside. Now, 8% doesn't sound like a lot, especially with a company that has a consensus strong buy rating. But the thing with PayPal is they're not a very high growth company, with exception to this past year. Because of COVID, a lot of things moving online that actually helped accelerate PayPal's growth because obviously they're an online payment platform. So that helped them grow a lot this year. But looking back at their 5-year chart, let's take a look at that right now. So you can see back in July of 2016, PayPal was at just under $40. And skip ahead to 4 years later, just under 4 years later, they're up to $123. And just looking at this line, it doesn't look like a lot of growth, but it's actually tripled in those 4 years. This big spike in this past year with PayPal has kind of downplayed how this line looks down here just because of that big spike up. But looking at this company before COVID, it's been a very steady growth and a very solid growth. Like I said, tripled their stock price in just under 4 years. Alright, now looking back at the TipRanks, like I said earlier, an 8% upside doesn't really seem like a lot, especially for having that strong buy consensus rating. But the thing with PayPal is they're more of a safety net company, with an exception to this past year with their high growth. But looking at their 5-year chart, they were very steady growth. They tripled in just under 4 years, which is actually solid growth. So with having this 8% upside, to me, that's analysts saying that PayPal is more of a safety net company, especially with giving them that strong buy rating. You want to have a company like this in your portfolio that will limit your losses if you're down, but it won't really deduct from your big gains. If you're a high growth investor, it'll just stay at market average, like the average price target says. Alright, so staying in the TipRanks website, we're going to look at their SMART score, which they're currently sporting a SMART score of 9. You look over here, again, a consensus of strong buy rating. Their sentiment very positive, very bullish in the last 7 days, especially very bullish. Really, on this page, the only thing you can see is their hedge fund activity has decreased a little bit, but everything else is very positive. And even looking at their momentum under the technicals, it's up 68.62% in the last 12 months. So there's a lot to be optimistic about with this stock. Alright, so the last thing I want to look at is this chart here, and it's actually a blogger sentiment chart, so it's actually from bloggers instead of analysts, but it's just kind of a different perspective, and I found this chart very interesting. So you can see here there's sector average, which they're in the computer and technology sector. This, I don't know the exact number, but it's about high 60s, low 70s, but look at PayPal over here, 96% bullish. So even within their sector, they're outperforming. All right, so staying on that note, like I said, PayPal is in the computer and technology sector. And according to a website called Zacks Rank, which ranks sectors, out of 16 sectors that they take into account, the computer and technology sector is 14. So it's not necessarily booming right now. Back in the 90s and early 2000s, the computer and technology sector was actually one of the hottest sectors. It's cooled off since then, obviously being now ranked 14th. Obviously, computer and technology is still a big part of the future, so it's not a dying sector. It's just cooled off since their big bullish run about 10, 15 years ago. But what I think is more important than the sector as a whole is looking at these companies within the same sector and comparing their growth. And according to Zacks Rank, out of all those companies in the computer and technology sector, they ranked PayPal number 2 as a buy rating. So staying on that topic, I want to talk about a article published by Yahoo Finance a couple days ago. It was Wednesday, July 7th of 2021 that this article was published. And what they stated in this article was that PayPal has moved about 25% on a year-to-date basis. And they compared that to the average from the computer and technology sector, which was just under 21%. So again, if you compare these companies within the same sector, PayPal is actually outperforming a lot of these companies, which is a very great sign for PayPal. And in the very last line of this article, Yahoo Finance stated, and I quote, "Investors in the computer and technology sector will want to keep a close eye on PayPal as it attempts to continue its solid performance." So I found that very interesting by Yahoo Finance. I actually agree with what they have to say as well. Alright, so after all that being said, this is my personal take on PayPal and what you should do with it right now. So PayPal is a great company. I agree with that, and we've seen it through TipRanks, Yahoo Finance, and even Zacks Rank with all these ratings. But I believe that PayPal is a little bit high right now. As we saw in that 1 year chart, they're only about $9 off of their 52-week high. I think their growth was accelerated because of COVID, with a lot of stuff opening up and there just being a lot of more face-to-face interaction. I think we can expect to see PayPal stock price dip a little bit in the near future. Right now they're at about $300, and as we saw, it was about an 8% upside from that average price target. I fully believe that we can see a dip to as low as $280 per share. And with that, I did the math. If you let PayPal drop to $280, I believe it'll probably be in the next couple months, and then you invest, you will then see a 14.6% upside to that average price target. Whereas, like I said, there's that 8% upside if you invest right now at $300. And honestly, I wouldn't be surprised if it even went a little bit lower. If you wanted to play a little more risky and try to maximize your profits, maybe even try to see 275 or 270. That'll really maximize your profits. But what I would like to do here is let it dip to 280, play it a little more safe, and get a 14.6% upside, which now beats the market instead of that 8%, which is under the market average. The last thing I want to mention with PayPal is they have their earnings report coming up here on July 27, 2021, so less than 3 weeks away. I think this could be a deciding factor on whether or not and how fast we see that dip, hopefully down to 280. If they report less than expected earnings, we could probably expect to see that dip happen very soon. And there's things to be optimistic about, whether they report better or less than their expected earnings. So if they report less, like I said, we can expect to see that dip and hopefully get in at 280 in the next month. But if they report greater than expected earnings, that just proves even more how great of a company PayPal is and how well they're doing right now. So either way, there's a lot to look forward to on this July 27th reported earnings date. Alright, so that concludes today's video on the breakdown of PayPal, ticker PYPL. I hope you guys enjoyed. Thank you everyone for watching. As always, if you guys enjoyed the video, we just ask that you guys give us a quick like and subscribe. And let us know down in the comment section if you guys have any questions, comments, or concerns. Or even if you have a suggestion on what stock you would like us to break down next, we are open to suggestions. In fact, we actually encourage them. Again, thank you for watching. Hope you enjoyed.